Hi and welcome, I'm Steelfur of Steelfur Speaks. This is a Flesh and Blood channel. This is where we talk about Flesh and Blood. We give our honest feedback on how the game's going. The good, the bad, the ugly. We just talk about the things that I think the community needs us to talk about. And sometimes that's going to be positive and sometimes it's going to be negative. But most of the time it's positive because Fab's a great game. In the news today, Fab has been featured in a finance segment in the New Zealand Herald. Now, for those of you who don't know, in my professional life, I am a market research analyst. I specialize in communications, technology, telecoms, networking, and security with niche focuses in those areas. Now, I don't focus in the TCG marketplace, but I am imbued with a certain amount of financial acumen and a certain amount of, financial understanding and linguistics and all the terminologies and things that go with understanding and reviewing a business when all you have in front of you is their balance sheet and their annual statements. That. So obviously when Fab gets a video that actually starts using financial terms and a proper financial journalist comes along and starts asking the follow-up questions that I really like it when they ask, we have a lot of fodder for a video. So here we go. We're not going to watch the whole thing. I have already watched it, so we're just going to jump through the headlines and kind of talk about the various things that they discuss. But I do want to just give them a second to... Well, I can't for copyright reasons, can I? But generally, let's just play the first few seconds from LSS and we'll see, how James, he's clipped into this. Quite fun.
Table card gaming is going off globally. The co-founder of one Kiwi company takes us inside its super profitable fantasy world.
People thought that I was crazy. This very much is a David versus Goliath story, and we're taking it to the big guys and winning. The addressable market is $1 billion just in North America alone for paper, tangible trading card games.
So you're chasing unicorn status.
Oh, hell yeah!
It's Monday the
So already, we've got financial terms there. So total addressable market, called TAM in financial circles, is essentially a thing that businesses use to calculate that the amount of money they could make if anyone who potentially would buy their service did buy their service. So imagine you're selling a pen that only companies with less than 10 employees would buy, right? It's a very niche pen. If there are 1 billion companies with less than 10 pens, with less than 10 employees, and you have this pen, then your total addressable market is that 1 million companies. So then if your pen is worth $20 and, there's these 1 million companies and each of these companies is going to buy one pen, then your total addressable market value is 20 million. Right? Because the 20 million, you're going to sell one pen to each company. Therefore, you're going to sell 20 million pens if everyone who could potentially want a pen ever bought one. Right? That's an oversimplification, but that's how you understand TAM, right? Total addressable market. It's what James White is talking about. The total addressable market in his figures for the North America is $1 billion for in-paper trading cards. Now, there's a bit of a debate as to how you come to that figure for that. It might be something that he got from an analyst or an industry analyst that focuses on games. LSS might have their own internal logic that does it. But it might be as simple as, 300,000 people and you budget that each of them is going to buy, a third of a box. So each of them is going to spend minimum £33. And therefore that means you get to that 1 billion figure, right? Or I guess it's free. It depends which value of billion you're using. But the point is you can work it out as like everyone is spending X amount or buying X amount of boxes, and we have X amount of theoretical customers, therefore this is the market cap, which is probably how LSS has gone about doing it, but they might have a more robust logic for doing it in the background. But still, it's a pretty ambitious number. We would say it's pretty realistic. You get these very, very large TAMs for consumer products like trading card games because the number of people who actually might buy it is quite high. The demographic for people who might buy Fab, already playing a trading card game, not already playing a trading card game, male or female, between different sort of age groups and backgrounds is huge. So, we'll say with commercial products and with like business focused products, like say a desk phone or something like that, the TAM is usually much more restrained in terms of the number of companies who are likely to buy something isn't actually as large as a lot of people think it is. With something like consumer, the sky is really the limit in many ways. And then she said, are you chasing unicorn status? And this is interesting because I always thought that I would call Unicorn Status a company whose public valuation was worth $1 billion. But if you chase that TAM and you get up to $1 billion in sales, then by virtue, your valuation as a company is $1 billion. But actually, you can hit a valuation of $1 billion a lot earlier than reaching $1 billion of sales. So, basically it kind of puts James White's ambitions, we'll say, for Fab into relief, because he's saying, look, this is the total market for card games in the US. We can chase that, and we're competing against, the big guys to make sure we can chase that. Which is, exactly what you would expect for a successful startup CEO to say, right? And I do want to put a bit more of like a caveat behind this video, because I think it's kind of important. She does talk about it in the video, is that it's important to note that the journalist herself says that she chased down LSS to do this interview. And the reason she did that is that in 2022, Deloitte, which is obviously a very large international consulting firm, did basically every year they do their Fast 50, which is their 50 fastest growing companies in the country. And they basically profile everyone. And in 2022, LSS won this. And then there's a whole profile in the report talking about LSS. It's actually a really interesting read. And I think LSS actually after that is technically the fastest growing country in New Zealand, company in New Zealand's history, just based on the rapid expansion of the game and the rapid amount of growth. Because remember that when Fab first comes on the radar of someone like Deloitte, the company was only launched in 2019. Their initial revenue to enter the Deloitte Fast 50 tracker is 1 million New Zealand dollars. So their revenue growth, and we'll talk about this more later because James does actually put a figure on their revenue growth. By 2022, Fab is making 64 million New Zealand dollars, give or take. So then their revenue growth from that period when they first got started tracking, they first hit that 1 million New Zealand dollars milestone, is 6,416%, which is, just to put this in context, like tech companies do this. Like very, very successful startups do this. And then they're usually acquired and someone buys them out and uses their technology. But the fact is that companies don't typically go from making very little money to making tons of money that fast. So this is a huge growth rate. And then when you say that it's potentially, I think it is the fastest growing company in the history of New Zealand, then you begin to understand what that means. Like, it's very, very rare for a company to go from entering the tracker to suddenly being 6,000% high on the tracker, right? And that's why nowhere else on this list do you see that standing of growth. Some of these other companies will also be small companies who only meet the criteria for tracking, barely, but then they haven't really gone up as quickly as it has. And I will say, so this does happen in tech and in consumer products, right? If a consumer product gets rapidly popular and is popularized by something like TikTok, for example, they can see their revenue growth spike massively. So I wouldn't say it's something unique to LSS, but it is definitely something that is worth noting because these sorts of revenue growth charts don't happen. So that's why this got onto the radar of this financial analyst at the New Zealand Herald, who obviously does these segments on companies doing things. You can see my YouTube history on the side. Well, not my history, but bit of Asmongold, lots of documentaries, bit of preach. But where are we going to go? So the industry itself as well, and she does acknowledge this in the video, is in a massive boom phase where we've got Magic still selling more and more revenues. We've got all these other things going on. Then she goes on a tour of LSS, which is really cool. And I would recommend you watch like some of this video, but I can't, for reasons of just sort of not copying the whole video, I can't show off too much of it. So I just want to sort of draw a few things. So obviously, as Fab players, we know a lot of this early struggle. We know a lot of this game vision, which is, get into place, people to the same place, play great games. And then he talks, I think, and this is kind of interesting and a bit that people should be aware of. He talks a lot about his background and the things he focused on in making the game, which I think we should hear.
before we started rolling the cameras, you said that you don't make games, you actually create and sell them. Talk me through your business acumen and where that comes from.
Yeah, so prior to Legend Story Studios, I ran a national distribution company called Hobbyco in New Zealand for 10 years. And so they really taught me how to engage with the B2B aspect of the business, run international supply chains. We would import products from all across the world, from all the different publishers of these tabletop games, and basically supply the entire New Zealand market. Taught me how to run these sort of B2B marketing campaigns, and also their end user marketing to get people into the store buying and engaging with these products. It also taught me how to build up these integrated inventory management system, warehousing and finance models to make it as automated as possible. And we very much used this domestic level business to learn all of these things that we could then take and plug into Legend Story Studios and scale it out into a global presence very, very quickly. So as an example, we have a warehouse in Chicago, Amsterdam, Taipei, Tokyo, and Auckland, to service the four corners of the world. And a lot of our supply chain is automated, and how it integrates into our finance systems as well.
I mean, look around.
So I want to break down and sort of underscore how important what he's saying there is. And I'm gonna talk about massively multiplayer online games and Kickstarter for a second. So the red flags on Kickstarter, if you're looking at Kickstarter on either video games, board games, and those kind of products, is have they done this before? And specifically when thinking about MMOs and massively multiplayer online games and Kickstarters, the thing that is always missing is the network skills, right? So loads of people have a great idea for an MMO. They buy Unity, they can design the game, they have good story even, they have good class concept design. They might even successfully launch the game. And the game goes live and the network falls over because it wasn't designed to work for the number of people who actually have to play the game. And the people who were making the game didn't have the network skills to actually keep an MMO online. Even World of Warcraft, biggest MMO in the world, what does it struggle with on launch day? It struggles with the network. The game will work perfectly. The game will work fine. And they have network expertise, and they have server expertise, and they have all of this experience getting the game live on launch day, and the servers still reliably die every single time the game goes live with a new expansion, right? So what I'm trying to say is that actually the most important thing about launching a video game, or an MMO, or a board game from Kickstarter, or a TCG, isn't actually the game, right? And a lot of people really forget this. It's not actually the game. The game obviously has to be good, because otherwise people won't want to play it, and you've got a bit of a dud product. But the second that it is good, the question of how do we get it to people, and how do we not let it be short printed, and how do we correctly estimate how many boxes to print so we don't flood the market or also starve the market. Because if people can't get your cards, okay, some collectors might be super hype on it and be like, wow, we're the only ones with these, but people won't be playing it. They'll just move on to the game they can play, and we've seen that time and time again. So really what he's saying, and this is the important thing that has made Fab incredibly successful, is that him as a CEO, sure, he's got game design chops, he makes them fun, and he hires people who are also good at game design, right? We've seen a lot of interviews with people like Chris Gehring back at the scenes who have been game designers with James for a very long time, helping him build this great game. But he's saying he's also got the other part, which is the distribution, which is I know how to take my product, get it printed, and get it delivered all over the world, which a lot of TCGs have lacked for a long time. So I think that's a really important thing to just highlight.
By 30% across the world, so that's people actually going into stores or going to our events to play the game officially. Keep in mind that not everyone wants to play officially. Like if you're playing officially, it means you're pretty engaged and pretty serious about the competitive play circuit. It's actually only a small percentage of the players who really strive to become a pro tour champion or a national champion. Most people are actually just playing at home on the kitchen table for fun, in a social capacity. So those active tournament players grew by 30% last year, and so did our store base across the world. So we're currently sold in 50 countries, and there's a smidgen over 4,000 stockists selling Fish and Blood and running regular events in their stores.
Which is fantastic, right? 4,000 stores running Gem, which is up from 2,000 in 2021. So let's just get James off that. He doesn't need that sort of freeze frame. But That's better. Yeah. Okay, cool. I always hate it when people pause videos at a time that makes the person look terrible. So we're up to 4,000 stores. It's almost doubled the amount of stores stocking things and running events on Gem. Remember, Fab is quite specific. You do have to have a play space, have a Gem account, be participating, I think, in armories in order to be able to stock the game. So if you don't have a play space, you can't stock the game, which is quite rigid requirement for, there are plenty of LGSs that don't have a play space for plenty of reasons. The other thing, of course, he's saying is demand is up 30% globally last year, and he's using the stat that I've always used to track Fab's popularity, which is essentially people registering and getting any amount of experience on Gem. Now, it is interesting because I don't want to be one of those people that says LSS reacts to what I do, but I did that video where I said I'm now tracking, and a few other people were doing it as well. We were tracking Gem player registration, 90-day XP registration, and set release. And we were correlating those two things. So set comes out, how many people within a month window of that set, wherever it was highest, so whenever the peak was within that month that the new set came out, how many people were registered on Gem, and how much did that change from the last time that you identified a peak, right? The crew would come out, and maybe the peak for crew players was 1 week after crew came out. So that would be your peak. And the same thing for Monarch would happen, like 3 days after Monarch came out, right? So those would be your two peaks, and you just see, has it gone up 10%, 20%, etc. And what I found when I did that for myself was that draft sets didn't really move the needle. Sorry, supplemental sets didn't really move the needle at all, but every time a draft set came out, the amount of people registered on Gem went up about 20%. And what we're seeing here actually is that number from when we stopped being able to track it because they stopped publishing it in the same way, has actually increased by about 10%, and actually arguably increased by more than 10%, because as I said, when I was tracking it, draft set comes out, 20% increase in the number of registered people on Gem. Supplemental set comes out, not really a massive increase, like 1 to 2%. But if it's averaging out 30% annually, then that means that even including the supplemental sets, the growth for each draft set release must be about like 30-35%. So what we're seeing is that every time a new set comes out, about 30% more people are kind of joining the game, and then that averages out over the year into be about 30% growth. And that's what he's talking about. He's talking about those Gem registrations, which is a very good metric because, as he says, there's a load of people who play this game offline at the kitchen table, they're messing around with it, etc. But actually showing up to an armory once within the space of 90 days is a sign that you're actually engaging with the infrastructure of Fab, and it is a good metric for how to measure the player base growth of the game.
You took out a record figure in the Deloitte Fast 50 with more than 6,000% revenue growth.
Yeah.
You need to hit a threshold of 1 million to get in.
That's
so
right.
You at least have made 64 million in revenue.
Yes.
I'm sure you've made...
This is New Zealand dollars, which, depending on where you are, is the exchange rate, but it is a very impressive figure to reach after only what we're on. Well, when they tracked this, it was 2022. So after only 3 years of operation for a company, you hit 65 billion in revenue. Pretty good.
A lot more than that. If Magic's making $1 billion, where are you on that path?
Yeah, so we're sort of like bouncing around on that 50 to 75 million at the moment, but we have a clear pathway to how we get to that 9-figure annual turnover. And look, we've got a lot of growth opportunities on the table. One of our key initiatives for 2024 is launching in Japan. So we have the localized version of Flesh of Blood releasing in May. Japan's the second biggest market in the world for trading card games after the US. So we've been taking our time to make sure that we have the capability internally to be able to really give ourselves the best chance of success in the Japanese market. And we're very confident about having a big launch, successful launch in Japan this year.
The Japanese launch is going to be huge. Like, let's not understate that. He's not lying when he says it's one of the biggest markets for TCGs in the world. If the Japanese love it, then Fab could be just set for life. I mean, I already believe that it is starting to be, showing signs of just being set for life as long as they can keep the design quality high and as long as they keep building on their momentum and learning their lessons. But success in Japan, that really is like set for life. Major
markets in US and in Europe as well. So lots of growth left on the runway. And one of the things that gives me immense confidence is just the team that we built at Legend Story Studios. Since we won the Deloitte's Fast 50, it really acted as a magnet to attract in exceptional talent to the studio. So we've built out our senior leadership team over the last sort of 12 months or so. We're starting to bring in some exceptional talent from overseas as well. And that's really putting us in a great position for that next growth phase. And also the new studio that we've just opened a couple of weeks ago, which is purpose built for all of the needs of what Legend Story Studios is now, and also future proofing for that next growth phase of welcoming more people to the team and taking on new markets and new growth challenges.
So you're chasing.
Well, the new office is absolutely gorgeous. I mean, I haven't seen it in person, but it looks fantastic. And I will say that it's always been fairly clear talking about LSS, that they've grown massively in terms of staff numbers from when we first sort of started talking about them a few years ago to now. And that is really, I mean, I've always been transparent. You can always track the danger phases for a startup, right? Danger phase for a startup 1. Can you use your funding you have available to get a minimum viable product out the door, and then will the market accept that product as it is and adopt it and start giving you enough revenue to take the next step, right? Load of companies die at that initial stage, right? Then the question, of course, becomes people like your product. How scalable is your business? AKA how much can you increase your current production based on the team that you have? And then once you start generating the maximum amount of revenue you can with the team you have, how quickly can you onboard and upskill people to do the same thing to scale your business higher? All right. And then obviously once you've done that, how easily can the original team delegate their previous responsibilities to the new staff members after they've trained them and hand over power? And for this reason, and I said this when it happened, and I still think that it's true, James White said he was disappointed with the Bright Lights Marvels, but it was too late to change them. And I said when that happened, that is actually a very, very good thing. And some people got a bit annoyed with me. They were like, well, they're terrible Marvels. Why do you think this is a good thing? And I said the fact that James White saw them so late in the art development cycle that it was too late to fix is a very, very good sign for LSS, because it means that James White wasn't overseeing that decision matrix on the art personally to make sure he was happy with it before those final decisions were made. Now, hopefully he didn't immediately react to that by saying, no, I have to see everything. Because, what I'm trying to say is that gives us an indication that he handed over responsibilities, that he correctly delegated those things. And really, all it says is that there was a bit of a breakdown in communication of his expectations versus what was delivered. But that's fine for a startup. Like, there will be these early frictions when you have all of this expertise centered in a few specific people that then needs to make its way into the outside world. And especially if you've got people who maybe have been working in a silo with 2 or 3 other people who know them very well for a period of time, there's always these things that go unsaid or that haven't been properly clarified. So you kind of get this understanding that maybe James White knows exactly what he wants a Marvel to look like in his head, but the new person that he's handled to oversee the Marvel development doesn't have a complete picture of what that is. Perfectly normal. It happens. That person takes the process along the way to such a point. James comes in, it's too late to get it aligned with his views, so they have to go live. But then that message filters back, and then we see exactly what we've seen in Heavy Hitters, which is some of the best Marvels, in my opinion, to date in the history of the game. Because I have been saying since 2020 that, in my opinion, the easiest win for LSS is to print full art Marvel extended art heroes for every hero in the draft set. And I've been saying it since then. Maybe they heard me, maybe they came up with it by themselves, but to me, that's the card I've always wanted. And I haven't bought full art Katsu because he's not available in English. But, I mean, just to make a quick point, right? There are 2 heroes that I've resonated with in this set, Olympia and Victor. What do I have right in front of me on my desk? I have gone out and traded and bought 2 Marvel full art adult Victor and Olympia, and I'm going to get the young Victor as well. Because to me, the full art heroes that I'm going to slap down on the table right in front of me every time I play this is the best Marvel we've had. So the fact that we've gotten here And there's that blip in the middle where James has obviously given up some power and things went a bit awry, but the ship has been corrected. That's good for a startup, right? That's good for a growth of a company because it means that power was given and now it's been reestablished or it's been better communicated, right? Which needs to happen for growth. So danger points of a startup, you have initial product launch, you have upskill and growth of team, and now LSS is in the expansion risk part of the startup growth where they're looking to expand into new markets. They have to spend capital to do that. And we'll hear in a minute why they're not as much at risk as other startups are, but they are in that phase. And then I've said it on Twitter, but I think the next phase of danger for any startup, in my opinion, so if you get to a point where you've got a guaranteed customer base, you're established in the market, you have a lot of processes getting your product shipped and delivered, assuming that continues and development continues, the product continues to maintain quality, the next stumbling phase is genuine like years later, right? So you have the rough bits at the start, but the next stumbling phase might be like 3 to 4 years later when key original members of a team, like maybe James himself, because being a CEO is very, very exhausting, or someone like Chris Gehring, these linchpins of design or distribution or manufacture or production, decide that they need a break, right? So if James has been the CEO for 10 years, he's tired, he says, look, I need someone else to be the CEO, start making these decisions, then you have another point of friction, right? Where how does that knowledge and that power and that modus operandi and that process transfer to the new holder of that position? I'm not saying James will retire. I'm saying that's what then happens with startups, is you enter this period of stable growth, but it can be threatened by either the product quality degradation, that can always happen, or it can be threatened by the transition of people who have grown out or just fatigued out of their key roles. I mean, I know very few people who have been a CEO forever, especially at a fast-growing company. Typically, they hand over the reins to someone after a while. Now, hobby games are different, right? Especially if it's your lifelong passion to make a game. So James White could easily be the CEO of LSS until, he retires from work altogether. But, we'll see. I'm just saying that's a question that still has yet to be answered, and it's a risk point in the future. But the confidence part is that probably isn't going to happen for 3 to 5 years. And there aren't really a lot of other risk points now as long as product quality is maintained.
Unicorn status.
Oh, hell yeah.
What year do you reckon you could hit it?
Yeah, just look, we want to be mindful about how we grow from here, right? I think for us, we have always been very disciplined about not overextending. We want to make sure that we're really focused on our core competency and, just taking things at a sensible pace. So I don't know, I can't give you a date, but what I will say is that we're really focused and disciplined at just taking things in sensible steps along the way so that we're doing the absolutely very best that we can for our fans and for our retailers and for the markets that we've committed to.
The main takeaway is that LSS is just committed to slow and steady growth at this point. And yeah, they'd love to be the next Wizards of the Coast. They'd love to have that access to that $1 billion of revenue like Magic has, but they know that they're not going to get there overnight, right? Fab is popular, it's making inroads, it's getting all of the right attention, and a lot of the naysayers have disappeared because, let's face it, it's hard to criticize a game that just keeps having large events and keeps having serious professional, circuits and tournaments. If it just keeps that up, more people will come and play the game. It's go for it.
$1 billion company would be nice to have on the NZX. Have you ever considered listing, going public?
I don't think that we want to IPO, or certainly not anytime soon. There is a number of really key growth initiatives that we are yet to fully engage with, and we're all just so passionate about what we do we want to just keep driving this hard, keep taking it forward, but we'll see what happens in the future. But at the moment, we're just really passionate about what we're doing, to be honest.
Have you had to take on any debt to fulfill your growth initiatives?
Everything is funded through retained earnings, and we have a 3-year track record of issuing very sizable dividends to our shareholders, so everyone is doing well from their investment.
That's amazing. Yeah. And one thing
So let's break this down. So a few concepts here, obviously, for people who aren't familiar with the financial concepts. An IPO is an initial public offering. It's the point at which a company takes their company from being a private company, so owned by a limited number of people who have private stock, into being a public company where you can buy and sell the stock on an international market. So the difference there is that, you know, James White probably owns 50% of the company, and he sold, you know, portions of it off to other people in exchange for their investment and their initial money to help fund the launch of Fab and all the subsequent sort of sets that have come out, right? And we know from other interviews that the majority of people who invested early on have been paid off, so or are still involved in some capacity, or have been paid off. So, you know, the company was doing well and has sort of rewarded its early investors who initially supported the game. But the decision to not IPO is interesting. You know, he is working at a company in a niche market, so an IPO wouldn't necessarily be successful. It does bring on a lot of additional legal and logistical burdens to the company in terms of public reporting, accountability to shareholders, you know, requirements having a board and all this kind of thing. So small companies doing IPOs isn't really something that they should do, certainly in my opinion, and the advice I've given to people in the past. Not that I'm giving that advice to LSS, right? Because I don't know their books and I'm not inside on them. But the point is, unless you need large amounts of capital, and that's what the reason you always see tech companies doing IPOs is that they need large amounts of capital to fund their expansion, their new product, etc., etc. And they need that injection of funds. And selling a lot of your stock through an IPO can give you a massive injection of capital, because you basically take on hundreds of thousands of new investors by selling small pieces of your stock to all of them. If you don't need the money and you don't need that funds to fuel rapid expansion, then an IPO just adds a massive amount of a headache. Of course, the journalist here is interested in them IPOing because this looks, you know, like a very successful New Zealand company. It's always very interesting for, you know, small countries like New Zealand to have these very successful companies on their stock market, because people will come from overseas to buy stocks in them, and that drives traffic through the stock index and all this other stuff. There's loads of positive other benefits, right? But let's focus on the two things that he said here that were quite interesting. The first one is that all of their expansions have been funded by retained capital. And the second thing that he said is that all of these shareholders have had substantial dividends, right? So let's break down those two things. So retained earnings are fairly easy to understand. It's just money that you've put aside to do a thing, okay? Now, that doesn't necessarily mean it's retained earnings from a single year. It might be a multi-year retained earnings. So, like, this Japanese expansion, for example, could be taking the profits from 2021 and, from 2022 and 2023, and lumping them together and using that to expand in Japan. But it might just be funded off 1 year. We have no way of knowing without the books. But basically, what it means is that LSS is taking money they've made through making the game and using that to expand to Japan and for their other growth initiatives. That is important, okay? Because typically, a lot of startups, smaller companies, younger companies have to acquire debt in order to do expansions. That's one of the reasons why a lot of tech companies, smaller companies, do try and do an IPO, because it allows them to take on debt from a large number of sources fairly easily. Well, easily. But they're saying they don't need to do that, which tells you something, that essentially the profits from Fab are enough to fund everything you're seeing on the screen. They're enough to fund the expansion of the new hires. They're enough to fund the brand new custom-built office. They're enough to fund the Japanese expansion. And on top of that, he said that his investors were being paid substantial dividends. Now, we don't know how many investors are left from the original investments. So he says, I think he either says it later in the video or now, but Fab wasn't funded by like any large commercial institution. He said that basically he couldn't get the loan that he wanted because people didn't understand trading card games. So he got loans from friends and family, which is fairly common for startups. I mean, one of the reasons that rich people run more startups on average than poor people is that most of the early Series A seed funding for startups comes from friends and family, right? And obviously, if you're rich and you have rich friends, you get a lot more tries at the friends and family funding before that well dries up. Whereas if you're poor, you get one attempt at it. And if that doesn't work, then you don't succeed. So, but that's something to consider. So, I think was it Barcelona or something like that? It was in an interview maybe with Fluke like a year or two ago. He said a lot of the people who originally invested in Fab have either been paid off or just like paid back, right? But that's not to say they're not still invested, right? So this can go one of two ways. You can invest in the early company as a friends and family, and then you can get paid out. So you can put in $5,000. The second the company is successful, they can give you $5,000. Or you can say, look, I believe in you. I'd like you to keep, the $100,000 I gave you. I don't want it back. I want to keep my shares in your company, right? Because I believe in your company and I think it's a long-term investment for me. And then you basically remain a stakeholder in the company. You have a say in some of what the company does, and you sometimes get these things called dividend payments. If you're not familiar with what a dividend payment is, dividends are essentially a payment paid to people who own shares in a company that reward them for the performance of the business. So you'll buy a stock, and most of the time if you buy a stock, it comes with a dividend agreement or a dividend rate, okay, that you're going to get. And it's very likely that when these people initially invested in LSS, some of them did agree that they would leave their money in and get a dividend payment, and other based on the performance of the company, and other people just agreed that they would get their money back when it made sense, or within a certain amount of terms. Like in 2 years, you have to repay me what you paid me. And the dividend is usually percentage based. So these people could have said, based on the performance of the company, I will lend you X amount of money, say $100,000, if you agree to pay me a 5% dividend every year. It's just like an example. I have no idea what the actual internal workings are, but I know that dividends exist and I know how they're structured. What that means is that if LSS makes, so the first thing to note is that most of the time dividends are based on profits rather than revenue. They can be based on revenue, but most companies don't agree to that because revenue, of course, is not profit. You could make 75 million in revenue and make 0 profit, and then you're paying people money you don't have. So most dividends are agreed on profit. So you could say, look, I want 5% dividend, and if LSS makes 75 million in turnover, they might make 25, 30 million in profit. You get 5% of that. Okay, it's a pretty good deal. If you invest in these things early, it can be a pretty big deal. The other thing dividends can sometimes also be based on the amount of investment you've put in. Like you invest £100,000 and you get 5% added to your £100,000 if the company meets its performance targets. But there's a few. The point is, we don't need to get in the weeds because we don't know how they've structured things. But there are quite a few different ways these things can be structured. But the point is that substantial dividends have been paid. Expansions are being fueled based on returned earnings, which means Fab is making enough money, LSS is making enough money to not only fund its Japanese expansion, its increased event schedule, because all of that does take deposits and things like that to pay for event venues, but also making enough money to actually pay off its shareholders, however many of them are still left, right? If people weren't bought out, they could all still be there. But that does paint you quite a picture of a company that is profitable. I think that's worth just acknowledging. Right.
I also wanted to talk to you about was profit margins, because at the end of the day you are selling paper, right? So the profit margin on that must be pretty huge. Can you give me any color?
Profit margins on TCGs, I'm going to see if I can find some figures on it, but I have a vague feeling that it is huge. Okay, I found a lot of conflicting figures. Some people it's 20 to 30, 40%. Magic is a bit tricky to figure it out at the moment because although Hasbro is publicly traded, there's so much under the Wizards of the Coast subsidiary brand, and also, Arena is lumped in with Wizards of the Coast too, so it's very hard to figure out what their paper profit margin would be. But safe to say the profit margin on paper is quite large, and that has been noted quite a few times. If you have a successful TCG, everyone assumes that you do actually make quite a lot of money on it, because ultimately it's not that expensive to print cardboard, and it is quite a premium luxury product to sell. Okay?
On that?
That's something that's a card that we hold close to our chest. I gotta say, but look, it's we're an IP-rich company, so look, it's a great business to be in. Yep.
They said they're an IP-rich company, and what I want to underscore here is people like One Piece, people like all this Universes Beyond stuff, people like Star Wars, TCG Unlimited. All these people who run their game based on or Locana, for example, based on an IP license, have to pay service revenue to service that IP, which will not be an inconsiderable amount of money. One of the reasons that LSS has successfully got quite large profit margins is that they have created their own IP, which has proved to be quite popular with the fans. Because of that, they're actually not servicing a regular sort of IP service charge, which means, of course, they have quite a lot of money because of that. Some people have said to me, and I'm just going to put this out there, I think who have no idea what they're talking about on Twitter and on Facebook and things like that have said to me, what are you talking about? She asked about profit margins. He didn't say anything. Companies who have large profit margins boast about them, so they can't be making that much money. And all I'll say to you, because I mean, just from my own experience, private companies don't talk about profit margins. They don't need to. Like, some do if they've got a boastful CEO and those kind of things, but they don't typically talk about profit margins. They don't have to disclose profit margin, right? Public companies have a public liability due diligence thing. They have to disclose profit margins. Private companies don't. And do you know what? Why would they? Right? Because if LSS says, oh, we're making 80% profit margin, suddenly their entire supply chain and the consumers are saying, why are these boxes so expensive? Why don't you just knock 10, 15% off? And if they come back and say, oh, we're only making 10% profit margin, then everyone's going to come back and say, well, LSS is a failing company. Like, it's very easy to lose by disclosing your profit margins. It's very normal for companies not to do it, just to let it ride and say whatever you think they are and give other positive indications. It's why everyone publishes turnover instead of profit margins, because you can say, I made $75 million and made a profit, and no one's going to look at you being like, well, you spent 20 million, so you 55 million is what you made, give some of it back. And no one's also going to say, oh, you only made 5 million, you must be in trouble, right? It's easy to just keep that number quiet, and then, things keep running along smoothly. Especially because you just think about how business works, right? You're getting discounts, you're getting deals. If a company who's selling you paper suddenly learns that you're making like 50 million, that paper's going to get more expensive, right? So look, to the people on Twitter and YouTube who are saying, oh, they don't publish their profit margins, they can't be making that much money. I'll tell you this, companies that pay dividends and companies that expand without taking on debt are making money. Now, it's hard to say how much money they're making, but the answer is actually just enough. And I know this is a strange concept to corporate America, but you don't have to constantly be making more money. If you have enough money to expand and meet your business expansion goals, and pay your shareholders and reward them for your investment, the answer to how much money you're making is enough, right? You're making enough revenue. And if all your staff are paid and you can get a new office and it's really shiny, you're making enough money, right? You don't have to pursue that crazy profit margin, boast about it, etc., etc. I mean, the private companies don't publish profit margins all the time. That's fine. This is a perfectly normal thing to do. So let's have no doomsaying about how this isn't normal. This is very healthy. This is very normal. Like, so many companies do this. He's given us plenty to go on that indicate that LSS is healthy. I mean, assuming it's all true, but he's saying it to a reporter at the New Zealand Herald. So we're going to assume it's all true, right? And if in 5 years' time it turns out none of this was true, then, well, we'll know that then. But we're going to assume all of this is true based on where he's saying it and how he's saying it, right? But he is a private company, so he doesn't have the same sort of responsibilities that he has to shareholders to say things in public that are true and not true, all that kind of stuff. But this isn't something to go on about, right?
Look, we give away 1.5 million US dollars in our pro circuit, so that's sort of like,
again, it's an indication of profit. How much money did they give away? Now, that is marketing spend, so it is viewed as a loss. So you could theoretically be making a loss or be fairly revenue neutral and still argue that you had to give away $1.5 million of prizes. But it is still a good indication that they increased that. They put it up. They could have kept it the same. I don't think anyone would have punished them. They could have run the same amount of events this year as last year. They have increased that as well. So all of the metrics point positively.
an example of the kind of marketing spend that we're able to deploy, through having a high margin business.
Now, James, I may have butchered in the introduction to this interview the aim of the game of Flesh and Blood. So in your words,
Determine what kind of equipment you want to start the game system over time, that they're respected and that they're valued. And again, it comes back to that opportunity I talked to at the start of the interview, where these other publishers were moving the fans to the online platforms. And for us, we are all about that in-person experience, and it typically is happening.
So I'm going to stop because my response to this is getting quite long. I would recommend you go and watch this video. I'll link it in the description. The rest of the video is very much talking about bits that you'll know, like how to play Fab. The rest of it, talking about the importance of game design, talking about just like, as we know, LSS places such a premium on culture and community. Fab is not going to be a digital game because, LSS want Fab to be an in-person game. So even if they could do, Fab TCG Arena, or whatever you want to call it, it's not necessarily aligned with their business goals of just having great in-person events. And to be fair, and this is very relevant, like, those goals of having great in-person events have paid off massively, because the number of people who've come to Flesh and Blood from Magic, specifically because Magic killed off their in-paper scene and Fab has one, is not inconsiderate, and it's quite large. So, that is an important decision. It's an important strategic decision and an ethos decision. All right, so we're going to leave James looking very well and healthy and probably really enjoying being approached by a financial journalist, to be honest, from, I think, what is the largest publication in New Zealand? Like, you go from being a startup to being interviewed by a financial journalist on a TV segment or one of the largest news publications in your country. That's got to feel fantastic. And, based on all these numbers that he said today, it looks like it's probably well earned. So yeah, I'll leave it there. I will say that, like, obviously I'm reviewing this with a bit of financial acumen and know-how. I have had a positive impression from all of these things. I am also aware of my bias. Like, I want LSS to come off from this looking good. And obviously, as a public company, they don't have to tell us, a private company, they don't have to tell us a lot. So, this is all speculation based on the things they're saying. If the things they're saying are accurate, true, and as positive as they presented them as, then it means that LSS is in a positive position. But as always, this is not financial advice. I'm not a TCG market analyst, not here saying your cold foil tunic is going to be worth 4 or 5 times as much. I'm not even really, because I've said it in other videos, I'm not even really saying that Fab is going to last 5, 10, 20 years, right? I am still of the belief, and I will always be of the belief, that the lifespan of TCGs is measured in eras, not in time. Games do just stop because 1 or 2 people in the senior echelons of the company, or that one designer left and the secret spice goes. It is just a reality, unfortunately, of our industry. And, if a card game like Legend of the Five Rings could just decide to stop making itself after 20 years, if profitable TCGs can just be cancelled because people just got fed up of them, market trends and consumer trends can be what they are, and they're very fickle. All I'm saying in this video, and I want to end on a positive note because I think this is fantastic and this is a great interview and all the signs are really fantastic. So I'm not a doomsayer either. Like, I think Fab is going to be alive for as long as the consumers want it, and as long as LSS can make it to the same standard, right? So really what I'm trying to say is, don't be silly with your money. I mean, as I've always said to people, and people should say, this is actually financial advice. Collectibles are not solid investments compared to stocks, shares, houses, assets. Be smart with your money, invest it in the right places. But this is a very positive interview. There's lots of positive signs of the game, not just their growth in terms of where they were to their turnover now. I think that's quite positive, but also just in terms of, expansion without taking on additional debt. Those are the big ones. Expansion without taking on additional debt, paying dividends, right? And being in a high profit margin industry. Those things mean that Fab should be making a lot of money, and it means that there shouldn't be a risk. And we saw recently Brian Gottlieb did an interview, and Blake asked him, was there more worry that heavy hitters had to succeed because Bright Lights and Dust to Dawn probably didn't sell as well as they wanted? And Brian said that fear wasn't there. And this is the reason that fear wasn't there, right? Early stage card games die if they have 2 bad sets in a row. The people get fed up with them, and they don't sell enough to make money to print the 3rd, to print the 4th or the 5th set after that, right? Fab is past that stage. It's at the stage where the community is giving it the benefit of the doubt. Even if there's a bad set or a slightly bad set, there's still some people who like the cards. There's still some good cards that people will take. And we'll just roll with the punches, because then they do heavy hitters and it's a great set. And also they have the capital standing behind them, so that even if a set doesn't sell as well as possible, they can drip feed it out into the market slowly. They can store it in their warehouses, which they have worldwide, so they're not flooding the supply chain like they've had to do in the past when Fab was younger. And that means that they're in a very strong position, that even if a set goes badly, they don't desperately starve for the money. Now, that's not to say there won't be risk points where, you know, LSS ups their like event schedule or does a new one of these expansion growth plans, and that means that the coffers are slightly lower than they should be. And then if they put out a bad set, then it could lead to them canceling some of their growth plans in order to get the next set printed. But they're probably, if they're smart, building a bit of a war chest that's going to be there to make sure that one bad set doesn't sink them. And the more years they do it for, the less that risk becomes. So, you know, there's loads of positivity in this. I will link the video. I do recommend you go and like it. I obviously can't do, like, I know people have asked me to do more videos like this, but I only really cover Fab, right? And there isn't like a ton of Fab market data out there on how the company is doing, especially since they hid the player number videos. So, like, I can't do more financial videos. Like, if you have topics you want me to cover in TCGs, let me know. I'll look into them. I do find other TCGs interesting. But someone was like, oh, I really wish you'd do more financial videos about Fab. And I'm like, I literally can't. I'm not sitting here covering, like, the price of singles every other day. I just don't think that's viable. And also, like, people will buy the cards if they want the cards, right? I will stand here talking about other things if I think they're relevant. And I will talk about finance if it becomes relevant. So thanks for listening. Like and subscribe to the video because that really gets me going. And watch the original video as well. It has some really great bits in. And I think as a Fab community, we should support the fact that this journalist has come to look at the game we love. Thanks for listening. I'll talk to you all soon.